Good morning, traders. This is Christian from Hertz Tribeca Trade Group with a quick trade idea on JD.com. So, yesterday we saw some aggressive call activity, mostly short dated, January as well as mainly December. Some call buying, short-term call buying going up in JD.com. And as I've said many times, that the option activity, what we see on the tape, can lead to an idea, right? So it doesn't necessarily mean that you have to buy what is going up on the tape, but it kind of just alerts you to say, hey, that's interesting. We haven't really seen aggressive call buying in this particular name in a while. And let's go ahead and take a look at the technicals and see if there's something going on here. So if you look at the open interest from yesterday, which I'll bring up here on Bloomberg. And you could see, for first of all, some of the shorter dated stuff, you could see that the open interest, which is all the way in the right column here, did increase, especially when you go out to January. You could see that a lot of open interest around the 39, 40, 41 strike did increase. And I think if you look at January too, you will also see that. I want January 2019, not this January, but next January. You should see that this also increased here out to the 40 strikes. So there's now 14,000. You can see there's quite a bit of open interest out there on that January 2019. So what I want to talk about here is the technicals. So that kind of alerted us to something going on maybe in the short term, somebody looking for momentum. But you kind of take a step back and first of all, if we look at a 5-year chart in JD.com, it's had a decent run up. This was the base that it was sitting in 2015, 2016. So really a lot of gains occurred in 2017, but it's decently off the highs. And I think many of you may have tried this trade before.
And
I've
Draghi now
certainly
speaking
tried for a
says
breakout
ample degree of
here
stimulus
a
still
couple
needed for
times. And it's been a
inflation.
little bit of a frustrating trade since that made the high back in July. I think people were expecting this to continue, but what we've seen is a lot of chop and a move. Notice how far this was above the 200-day moving average. So we have a check back to the 200-day and kind of a downward pattern here, a downward wedge that we've seen here for the last few months. And however, so we did get below the 200-day moving average, but we reclaimed it just yesterday, which was Wednesday the 13th, December 13th. So we have a nice reclaim of the 200-day moving average, this long white line. You also have the price pressing above this this down wedge that I would call it, downtrend wedge. And look at the volume that's kind of confirming the move. We also have a break higher using the value areas. So you could use support here of the top of value, which is basically right here. So that may dip in the short term. If you get an inside day, is where I would be looking to establish a position. Also, you have the 200-day moving average as your support. And then finally, just also that, which I think is notable here, is a bullish MACD crossover too, which is what we want to see when entering into a trade. So there's two ways that I would think about playing this particular name. It is only a $40 stock,
ECBC's
so I
2019
think
economic growth at
looking just
1.9%
at a cash
versus
position
1.7%.
versus the 200-day moving average makes a lot of sense to me. If you want to play it in options, I think at this point, giving it a little bit of time, considering that this has been this, move has taken a bit of a time. I would either think about going out to at least maybe March, May, June, but actually the January options. And if you look at the 45 options, the implied volatility, it's not necessarily a cheap option with implied volatility right around a 35%, but the 45 strike, which is up here, costs you about $4.50, so $4.50. So again, you have a little bit more than a year for this to kind of do its thing. And then if you don't want to play that, so you could do the 45 strike. You could also cross that up maybe with the 50 strike. So maybe make that into a call spread, 45.50, again, going all the way to January, or maybe even the 45.55 call spread. So that's an idea that you could put that trade on going out long distance, or not long distance, but long term, or you could just put the trade on in cash and not have to worry about the implied volatility and picking a target and basically just going long versus the 200-day moving average. All right, so that's a quick 5-minute video. A lot of things that I liked yesterday in JD on the chart, and I think it's a good time to try along here. Thanks for watching and have a great day.